Over the weekend, a geopolitical bombshell just exploded in the Middle East. And for all of us here in India, Monday's market opening is looking like a total minefield. So, what exactly went down, and how is it going to hit your portfolio? Let's jump right in.
So here's the headline that has everyone holding their breath. The U.S. and Israel have launched a coordinated military strike against Iran. Now, this was not some minor skirmish. We're talking about a major operation targeting Iran's military and nuclear infrastructure, which President Trump himself has confirmed. This is a huge escalation, and you better believe the shockwaves hit the global markets almost instantly.
Just take a look at how markets reacted as the news broke on Friday. It was a classic textbook flight to safety. Money just poured out of stocks. You can see the Dow and S&P 500 taking a dive as investors dumped anything that looked risky. And where did that money go? Straight into safe havens. Brent oil shot up almost 3%, gold climbed over 1%, and look at the VIX, the market's fear index. It spiked more than 6%. The market is telling us loud and clear that it's scared.
So yeah, the very first dominoes to fall in a situation like this are always global commodities. We're talking about oil and gold. Think of them as the canaries in the coal mine for geopolitical risk, and right now they are screaming that there's danger ahead.
And it all comes down to this one narrow strip of water, the Strait of Hormuz. I mean, why is it so important? Well, it's one of the most critical logistical choke points on the entire planet. A massive chunk of the world's oil supply has to squeeze through this tiny passage, which basically makes it a powder keg anytime there's a conflict involving Iran.
And the scale of the risk here, it's just staggering. Don't just take my word for it. Energy analyst Saul Kavanek points out that a disruption here could impact over 20% of all global oil and natural gas flows. And listen, this isn't some far-off possibility. It is a real and present danger. We're already seeing reports that major oil companies have stopped sending ships through the area. This is happening right now.
Which brings us to this big, scary number, $100. Analysts are already warning that if this situation gets any worse, we could easily see crude oil prices blow right past the $100 a barrel mark. A move like that would send an absolute tsunami through the global economy.
Okay, so with oil prices flashing red and stocks looking shaky, where do investors go to hide? Well, the traditional answer, as always, is gold. In times of crisis, it's the ultimate safe harbor. And with this much uncertainty swirling around, you can bet that experts are predicting a big gap-up opening for gold on Monday as investors just scramble for any safety they can find. All right, so let's bring this all back home. How do these massive global shockwaves translate to India's economy? Well, I'll be honest, it's probably going to be pretty painful.
And the very first victim? The Indian rupee. It's already taking a beating, suffering its worst day in over a month. It fell 0.6% to a two-month low of 86.08 against the dollar. In fact, the pressure got so intense that the RBI had to step in and literally try to stop the bleeding.
And here is exactly why this is such a massive deal for India. We import a ton of our oil, right? So check this out. For every $10 jump in the price of crude, our current account deficit widens by 0.4% of our entire GDP. And what's more, it pushes headline inflation up by about 35 basis points. What does that mean for you and me? It means everything is about to get more expensive. So, with all that as a backdrop, what does this mean for Dalal Street, for the stock market? You know, it's actually not all bad news. There are going to be clear winners and clear losers, and knowing the difference is absolutely crucial right now. This slide pretty much lays it out. The ones who are going to get hurt are the companies that depend heavily on crude oil. We're talking about aviation. Their fuel costs are about to soar. We're talking about paint companies, since their raw materials come from crude. And of course, the big oil marketing companies like IOC and BPCL, whose margins are going to get squeezed. But there's another side to this coin. The domestic oil producers, guys like ONGC and Oil India, well, they're going to be laughing all the way to the bank, selling their oil at these new inflated prices. All right, for all you traders watching, this next part is for you. Let's get technical. With this geopolitical bombshell just dropped on us, what are the key levels for the Nifty that are going to make or break the market on Monday?
You see, here's the thing. The market was already on shaky ground even before this crisis blew up. On Friday, the Nifty closed down pretty sharply, and crucially, it broke below its 200-day exponential moving average. For any of you who follow charts, you know that's a big flashing red flag. It means the short-term trend was already weak, putting the market in a very precarious position heading into the weekend.
So, that brings us to the billion rupee question from Monday's open. What are the key levels we absolutely have to watch on the Nifty 50?
Okay, here are the numbers you need to burn into your memory. If we get any kind of bounce, it's likely going to run into a wall of sellers between 25,400 and 25,500. But the real battleground, the absolute line in the sand, is the psychological 25,000 mark. If the market breaks below that level, you better look out below, because the next logical stop could be all the way down at 24,800.
So, we've got a weak market, a geopolitical crisis brewing. What is an investor supposed to do? Do you hit the panic button and sell everything, or is there a smarter way to play this?
Well, here's what some of the pros are saying. Kranti Botany is suggesting that even though the short term is going to be incredibly volatile and probably pretty ugly, long-term investors might actually see this as a golden opportunity. The whole idea is to use the panic to buy fantastic companies at a discount. It's that classic strategy, right? Buy when there's blood in the streets.
And really, that's the bottom line here. Is this the beginning of a new bear market, one driven by war and runaway inflation? Or is this just a short-term fear-driven event that's creating a once-in-a-blue-moon buying opportunity? The next few days are going to be absolutely critical. So the most important question is, what's your move going to be?